Price doesn't hurt traders. Unprepared thinking does. The damage doesn't come after the loss. It happens while price is moving, when your mind fills the silence with fear, hope, and stories that don't exist. By the time a trade hits you, the real mistake has already happened internally. So let's talk about how to think in real time while candles are still forming, not after your emotions have already taken control. When price starts moving, the brain goes into prediction mode. Every tick becomes a question. Is this going to win? Should I exit early? What if it reverses? This is where most traders lose control. Not because the market is doing something wrong, but because the mind is trying to forecast instead of observe. Professional traders don't think in outcomes while price is moving. They think in states. State 1, structure intact. State 2, structure invalidated. Nothing in between matters. If structure is intact, there is no decision to make. If structure is broken, the decision is already defined. This removes emotional negotiation. Think of it like flying an airplane. A pilot doesn't guess where the wind will push the plane next. They monitor instruments and follow procedures. When turbulence hits, the pilot doesn't improvise. They trust the checklist. Trading is the same. Your job while price is moving is not to predict, react, or feel the trade. Your job is to monitor conditions. Here's the core mental shift. Instead of asking, is this trade working? You ask, has anything changed? Change is objective. Fear is subjective. This single question keeps traders calm in live markets. Let's break down what not to think while price is moving. Do not imagine profits. Do not imagine losses. Do not move stops to avoid pain. Do not zoom into lower time frames for reassurance. All of these behaviors are attempts to reduce uncertainty, and they always backfire. Uncertainty is the cost of trading. Professionals pay it up front. Struggling traders try to avoid it mid-trade. Instead, you build a thinking framework for live price. You decide before entry where you are wrong, where nothing matters, where action is required. Then while price moves, you don't think. You check. Check structure, check time, check volatility. No interpretation, no storytelling. Imagine watching a pot of water heat up. A beginner stares at every bubble. A professional knows the temperature and waits for the boil. Watching price is the same. Now, noise means nothing without context. This is why post-trade analysis is easier than live trading. After the fact, the brain feels safe. During the trade, the brain feels threatened. So, we train thinking before and during, not after. Here's a powerful live trading mental rule. If you are thinking about money while price is moving, you are already late. Money thinking belongs outside the trade. Execution thinking belongs inside. As price moves, your internal dialogue should be boring. Still valid, still valid, still valid, or invalidated, exit. That's it. No negotiation, no commentary. When traders say they can't handle live markets, what they really mean is, I don't have a thinking structure that protects me from my own mind. Calm traders don't have stronger emotions. They have fewer decisions. When price is moving, time feels different. Seconds stretch. Candles feel louder than they are. Your body reacts before your mind finishes a sentence. This is where trading becomes psychological. Not after the trade, not in hindsight, but right here while the candle is still alive. So let's slow this moment down. Imagine you've just entered a trade. Your entry was clean. Your stop is defined. Your target is placed. And then price hesitates. Nothing dramatic happens. No explosion. No confirmation. Just movement. This is where most traders begin to suffer. Not because price is doing anything wrong, but because the mind hates empty space. The brain wants closure. It wants certainty. It wants resolution now. So it fills the silence with thoughts. What if this fails? What if I entered too early? Should I reduce risk? These thoughts feel helpful. They feel like protection. They are not. They are attempts to escape uncertainty. Here is the first core principle of thinking while price is moving. You are not here to think creatively. You are here to think mechanically. Creativity belongs in planning and review. Execution belongs to rules. Real-time scenario. Number 1, price moves slightly against you. Price pulls back a little. Nothing is broken. Structure is intact. Your heart rate increases anyway. This is your brain confusing movement with danger. Here is the correct internal dialogue. Movement is allowed. Nothing is broken. I am still in the trade. That's it. No commentary. If you need to convince yourself, your rules are not clear enough. Now, let's add a mental drill here. The still valid drill. While in a trade, and every time you feel emotional tension, ask only one question. Is my reason for entry still valid? If yes, you do nothing. If no, you exit without debate. This turns trading into a binary system. Binary systems reduce emotion. Real-time scenario. Number 2, price moves quickly in your favor. This is where many traders sabotage themselves. Price jumps, profit appears. Your brain lights up with dopamine. Now the thoughts change. What if it reverses? Should I take partials? I don't want to give this back. Notice what happened. Fear didn't disappear. It changed direction. Fear of loss became fear of losing unrealized gain. The correct thinking here is identical to before. Still valid. Still valid. Still valid. If you move stops or exit early without a rule, you are not protecting profit. You are feeding anxiety. Here is another mental drill, the candle detachment drill. While price is moving, you do not watch individual candles. You watch zones. Zones don't twitch. Candles do. Zooming into candle detail increases emotional volatility. Professionals think in areas, not ticks. Real-time scenario. Number 3, price approaches your stop. This is the most emotionally loaded moment. Price gets close. Your body tightens. Your breathing changes. Your brain screams, do something. This is where discipline either exists or it doesn't. Here is the internal dialogue of a calm trader. This level defines wrong. If hit, I am wrong. Being wrong is allowed. This sounds simple. It is not. Because the ego wants to avoid being wrong more than it wants to make money. Here's a powerful reframe. A stop loss is not punishment. It is information. It tells you one thing only. This idea did not work this time. Nothing else. The no narrative rule, critical. While price is moving, you are not allowed to tell stories. No, this looks weak. No, this feels strong. No, they're trapping traders. Narratives increase emotion. Rules reduce it. Your mind's job during a trade is not interpretation. It is monitoring. Let's talk about attention control. Attention is a limited resource. If all your attention is on price, you have none left for discipline. This is why professionals often set alerts, walk away, check at specific times. Constant watching amplifies emotional noise. Mental drill, the instrument panel. Imagine price as an instrument panel in a cockpit. You don't stare at one gauge, you scan. Structure arrow intact or broken. Time arrow early or late. Volatility arrow normal or expanding. You don't react to one needle twitching. Another deep shift happens when traders stop asking, is this trade winning? And start asking, am I executing correctly? Outcome thinking pulls you forward in time. Execution thinking anchors you in the present. Real-time scenario. Number 4, chop and indecision. Price goes nowhere. You feel trapped. Time feels wasted. This is impatience masquerading as analysis. Here's the correct thought. Time passing is not risk increasing. Only invalidation increases risk. Waiting is not losing. Now, let's talk about why thinking during price movement is so hard neurologically. The brain evolved to act, not wait. Waiting without feedback triggers anxiety. Trading demands exactly that. So, we compensate with structure. The preloaded mindset rule. All thinking must happen before the trade. During the trade, you are simply executing instructions written by your calmer self. If you are thinking hard during a trade, you failed before entry. Here's a final mental drill that elite traders use: the commentator elimination drill. If you notice an internal commentator speaking while price moves, label it commentary. Then return to the checklist. Labeling breaks identification. Calm traders are not calm because they don't feel. They are calm because they don't negotiate with feelings. So when price is moving, your job is not to predict, not to hope, and not to protect yourself emotionally. Your job is to observe, check, and wait. Structure intact, stay. Structure broken, exit. Nothing else matters in real time. And the market does not require brilliance while price is moving. It requires restraint. And restraint is not passive. It is active discipline, moment after moment, while nothing dramatic is happening. That is where real traders are made, not after the trade, not in hindsight, but right there, in the quiet discomfort of live price. Over time, traders stop losing not because they finally figured the market out, but because they stopped reacting like someone who needs the market to do something for them. They no longer need validation. They no longer need to be right now. They no longer need action to feel progress. They learn to sit inside uncertainty without flinching, and that is an identity shift. Think about this carefully. Two traders can take the exact same setup, same entry, same stop, same target. One trader watches every tick, tightens their jaw, exits early, re-enters emotionally, and finishes the day exhausted. The other places the trade, checks validity, and lets time pass. The difference is not skill, it's self-relationship. One is still trying to control outcomes. The other has accepted probability. Long-term profitable traders don't think better during trades. They think less. They've learned that the market does not reward effort in the moment. It rewards preparation, restraint, and consistency over time. This is why their presence feels calm, not because they are fearless, but because they no longer personalize price. At some point in every trader's journey, a quiet realization happens. The market is not responding to me. It's not against you. It's not testing you. It's not watching your stop. It's simply moving. And when you stop projecting meaning onto movement, you gain something more valuable than confidence. You gain neutrality. Neutrality is the highest mental state in trading. Not excitement, not conviction, not even optimism. Neutrality allows you to follow rules without resistance, accept losses without collapse, hold winners without fear, walk away without regret. This is not learned in theory. It's learned one live candle at a time when you choose not to react. There's a reason veteran traders often sound boring. They don't describe trades emotionally. They don't dramatize outcomes. They don't chase narratives. They speak in terms of still valid, invalidated, executed as planned. This isn't coldness, it's maturity. Over years, something subtle happens. You stop identifying as someone who trades. You begin identifying as someone who executes systems under uncertainty. This identity carries into everything: decision-making, patience, emotional regulation, risk tolerance. Trading stops being an activity. It becomes a discipline you practice. And here's the final truth most traders don't hear enough. The market never asked you to feel comfortable. It only asked you to be consistent. Comfort is optional. Discipline is not. So, when price is moving next time and your heart rate rises, remember, this moment is not about the trade. It's about who you reinforce yourself to be. Every time you follow your plan while uncomfortable, you are training the only edge that compounds forever. Your identity as a calm, probability-driven operator in a chaotic environment. That is how traders last. That is how traders grow. And that is how thinking while price is moving becomes your quiet advantage. Not just in this trade, but in every one that follows.